Have you recently invested in gold?
I have invested in some units of sovereign gold bonds.
Oh, you've invested in sovereign gold bond. I don't have an idea about sovereign gold bond. Can you please explain me what it is? Even I want to invest in it.
Yes, sure. Stay connected till the end of this video to get a detailed analysis of what is SGB, an overview of the current gold market, and how you can invest in these bonds. Also, don't forget to like the video and subscribe to the channel. Hello everyone, welcome back to Financify, where finance is made simple for everyone. So without any further delay, let's get started. The very first question which arises in everyone's mind is whether we should be investing in gold or not. Well, most of the financial advisors say that gold should always form a small but a crucial part of one's portfolio. Most of the risk-averse investors look for safety, liquidity and returns before investing. And gold has delivered an annualized CAGR of around 10% in the last 10 years, making it a pretty optimal investment. However, given its dependencies on external factors, an investor should not allocate more than 10 to 15% of their portfolio to gold. Now, there are various avenues to invest in gold in India, like mutual fund, ETF, physical gold, digital gold, SGB, etc. We will discuss each of these instruments in detail in another video, but in this video, we will cover a detailed comparison between physical gold and gold sovereign bond. In our Indian society, selling gold jewelry is considered as a very bad omen, as society thinks that the individual is running out of funds and for the purpose of surviving his necessity, he is selling gold. To solve this thought process, the concept of sovereign gold bond came into picture. But do you know what is SGB? It is a government security issued in the form of certificate by the Reserve Bank of India and is denominated in grams of gold. At the time of redemption or premature redemption, you will receive the redemption amount as per the prevalent market gold rate. In addition to capital appreciation, you will also be entitled to a fixed interest of 2.5% per annum on the invested amount, which would be paid half yearly. That is, if your annual interest comes to rupees 100, then 50 will be paid twice a year in every 6 months. Coming to the tenure of investment, the maturity period of the bond is 8 years. However, you can choose to exit the bond from the 5th year only on the interest payout dates, that is in every 6 months. We suggest you to hold this instrument till redemption, that is till the end of 8 years, as you will not be charged any long-term capital gain tax on the capital appreciation. For example, if you have purchased the bond at rupees 5,000 and redeemed at rupees 8,000 after 8 years, in this case, you will not pay any tax on the capital appreciation of rupees 3,000, but you will have to pay tax on the interest component of 2.5%. How are sovereign gold bonds better than physical gold? When it comes to risk, the sovereign bonds are issued by RBI, so it's 100% safe. Also, the bonds are held in the books of RBI or in demat form, thus eliminating the risk of loss of certificates. But physical gold, being a physical item, can be lost or stolen with little chances of recoverability. Let's compare returns. SGB offers a market-linked return plus an assured return of 2.5% per annum, whereas gold jewelry only offers market-linked return. SGB is also free from issues like making charges and questions on purity, which pertains in case of gold jewelry. Plus, there is a GST of 3 to 5% and making charge of around 10 to 25% on jewelry. Let's discuss taxes. There is no capital gain tax if held till maturity, that is till the end of 8 years. In case sold after 3 years, there is a long-term capital gain tax at the rate of 20%, which is levied with indexation benefit, and short-term capital gain tax if sold before 3 years, depending upon your tax bracket. In case of gold jewelry, capital gain tax is levied. How is the issue price calculated? It is calculated using the last 3 days simple average closing price of gold with 99.9% purity from the issue date. If the last 3 day prices are rupees 4900, 5000, 5100, then the issue price will be rupees 5000. When is the next issue coming up? The Series 4 issue will be coming up between the 12th of July to the 16th of July 2021 and subsequent series to follow. How can you purchase it? You can apply either through offline route, wherein you will have to collect the application from the issuing banks or designated post office or through agents. Alternatively, we would advise you to apply it online through the website of listed scheduled commercial banks or through various broking firms. And the best part is, you will get a discount of rupees 50 per bond in case you are applying online. You can also procure the bond through stock exchange. What is the minimum and maximum limit for investment? Minimum yearly investment in the bond shall be 1 gram with a maximum limit of subscription of 4 kilos for individual, 4 kilos for HUF and 20 kilos for trust and charitable institution. Do keep in mind this is a yearly limit. In the next year you can again buy 4 kilos and 20 kilos. Since the minimum investment is around rupees 5,000, which is even less than any other equity IPO subscription amount, so anyone can buy. Gold sovereign bonds are new age investment vehicles for those interested in diversifying their portfolio with gold holdings. Thank you for watching this video. Don't forget to like the video and subscribe to the channel. We'll be doing an in-depth comparative analysis of each of the instruments, so stay tuned.